right, by now you have got wind of this New York Times report, quite a lengthy one, outlining the president's tax returns, technically transcripts, going from 1985 to around 1994, during which time Donald Trump racked up about $1.17 billion in losses that helped allow him to write off over the course of 10 years to the point that he didn't have to pay any taxes in 8 of those 10 years. Now, the administration is saying that this is a highly inaccurate fake news hit job. But whatever your personal points, we want to get to the laws of accounting, not only what they are now, but what they were back in the 80s and the early 90s when this was going on, and the size of the assets that we're talking about here in the real estate empire and the casino empire that was and remains Donald Trump. Liberty File host on Fox Nation, Judge Andrew Napolitano, says that the president's legal defense on this is accurate. He wasn't doing anything untoward, right?
Correct. I mean, what the president was doing, what Donald Trump, private citizen, was doing at the time was creative accounting, which he would have been foolish not to do. So if he made an investment, let's say he bought a hotel for $200 million and he had to get rid of it. He had to pay off the debt that he used to acquire the hotel, and he could only sell it for $50 million. He can take that $150 million loss and spread it out against other income coming to him. He would be crazy not to do that. That was written in the tax law to enable people like Donald Trump to engage in speculation, to buy and sell businesses, because in the act of buying and selling, he's employing a lot of people, and he's energizing the economy. In his case, the numbers are enormous, truly enormous. But we know he was audited. We know the IRS approved it. We know it's consistent with the law. So why is it a headline in the New York Times? Because the New York Times wants to try and undermine him with his base, which is unaccustomed to numbers of that magnitude.
But didn't a lot of people already know it? And I'm not casting aspersions on the legality of any of this. It's perfectly legal. You have huge losses. You could write them off over the course of years. They don't let you do it in the very first year, but they let you spread it out. But it does indicate that maybe the much celebrated business acumen wasn't there, that he failed with an airline, failed with a casino, that he failed with the New Jersey Generals football team, as if. And I could go on to say hotels and retail estates. Now, he's perfectly within his rights and legal rights and accounting accuracy to pile up those losses in excess, as I said, of $1 billion and write them off of the course of
the New York Times piece is a political piece, because they're saying he did not accurately describe his own success. But it was accurate from the IRS perspective. And if you know about success in real estate, and he dominated real estate, commercial real estate in New York for a generation.
And so you
have ups and downs. You have good years and bad years. He had 10 rough years. In the years following that, top of his game, he made a lot of money, and I presume he paid a lot of taxes.
All right. So, and he did indeed. We don't know the degree to which he was. I mean, they're trying to get right now in the House 6 years worth of tax returns. The last 6 years, they would be apparently interesting because of this issue of whether he was colluding with the Russians.
So how did the New York Times get this stuff? Well, if you read the article, they say it was shared with them by someone who had legal access to it. No one who had legal access to it had the legal authority to share it with the media. Times is protected. New York Times against Sullivan, and New York Times, the Pentagon Papers case protects the New York Times as the publisher. It does not protect the thief who had access to it and gave it to the
Well, how did they get their hands on that? Remember that during the 2016 campaign?
Well, that they said it showed up in the mail.
Yeah.
Now, I looked at that. That appeared to be a real tax return that was signed by President Trump.
It was like a page,
right? And his then wife. What the New York Times claims it has is not the actual tax returns, but the summaries of his returns that the IRS prepares. When you are taking deductions year after year after year from the same loss, and you file for the deduction, they have to go back and examine the loss and make sure it was a real loss. So they had these summaries. Somebody got their hands on those summaries and shared them with the New York Times.
Why don't you think, and again, it's a moot point now because he's never going to release them voluntarily, he ever release the taxes? Everything you're right is legal. I've talked to accountants. I've taken some accounting classes, so I think I'm an expert. But it is nothing really illegal or wacky going on here. What I do notice, though, working backwards with the numbers, because you can never tell someone's worth from a tax return.
Right.
There's a reference there in one year where he made $53 million in interest, I think in 1987, and you're doing that backward. If you made that much in interest, it had to be an investment worth at least $500 million.
Right.
So leaving that aside, maybe it calls into question that he wasn't as rich as he said he was, but bottom line, he was rich, right?
He was rich, and his wealth was addressed with the IRS with perfect consistency with the law. And that's really all anybody should be concerned about. He can put whatever spin he wants politically on it. But the implication in the New York Times article was there's something untoward here.
Yeah.
I haven't seen the IRS documents. The only thing I saw is the New York Times article.
He took full advantage of the laws in place,
Absolutely.
most of which are still in place today.
Correct.
And that's it. That's
Yes.
the end of story. So
when he says in his tweet, and sometimes his tweets can sting, as you know. But when he says in his tweet, this is fake, this is not newsworthy, he's right. It's newsworthy because the number is enormous. But the behavior was perfectly lawful, and it would have been foolish not to have done what he did.
I will say this, whether you want to play politics with this or not, there's a lot more obsession with the president's taxes and what he paid and to whom he paid and what he didn't pay than there is to the tax cuts that he helped orchestrate.
Right.
But who am I?
Yep.
A modest country anchor.
But wait a minute. In New Jersey, they were tax increases. We don't want to go there.
Thank you for reminding me that, my fellow Garden Stater.